Hey, everybody, welcome back to another conversation here with cannabis industry professionals. Today on the episode, I have Dr. David Cunic, the founder of UCS Advisors, as well as a cannabis industry veteran of 20 plus years on the medical side, turned capital side, turned kind of everything in between. But I don't want to steal your thunder. Dr. David, I'll let you introduce yourself.
Raymond, thank you so much for letting me be here today. And kudos to everything you guys do at Dope CFO. Keep up with the great work that you're doing in the industry. So, worked with many of your people at Dope CFO. So, keep up that great work, buddy.
Appreciate
So,
it.
myself, everyone knows me as Dr. David. A lot of people forget I'm actually a physical therapist by trade. And I actually used to own the number one rated physical therapy facility in one of the top 15 richest counties in America for 8 years in a row. I've taken care of professional athletes. I've done long-term care. I've done subacute care. I've worked at VAs. And when I started my medical career, I started it in the state of Maine back in about 2001. In Maine, some of the old school people say it's the third state. Some people say it's the fifth state. But we got medical marijuana laws back in 1999. Think about
Dang.
that. 1999. I started my medical career in the state of Maine, and the orthopedic surgeon I was working for, was a big fan of using cannabis instead of opiates. So
Fair.
I was already teaching patients how to use cannabis instead of opiates. And then people always ask, well, how do you go from physical therapist to a cannabis guy to doing this? Um,
Yeah, they're
so
three
I,
completely different things.
Oh, very much so. So I actually went from having physical therapy clinics, personal training centers, Pilates studios, yoga studios.
Okay.
Um, I did a few other businesses, and then I actually took my company public here in the U.S. And I was actually one of the first back then, probably one of the first 100, 150 publicly traded cannabis companies on the OTC in America, not Canada, but here in America.
Yeah, that is a
And
stinky mess.
for the accountants that are listening, I actually did my own S1. So I took the company public from scratch. And what we did was we covered the benefits of, we produced 100 articles every day of about health and wellness for people and for their pets. And back in
Okay.
2009, 2010, every day we covered articles on the benefits of CBD for humans and for dogs. And we also talked about some of the benefits of medical marijuana for humans.
That is
So
really early 2009. That's pre-Farm Bill days.
yeah, it was pretty early, and that's when the CBD rush was still kind of coming in. From there, I then actually did testing labs, and I had testing labs in Las Vegas. I was one of the original seven in the state to be a cannabis testing lab. Denver, Colorado, and Portland, Oregon. And then from there, did a couple other things, and I started UCS Advisors, which stands for two things right here. The first one means use common sense,
I do like that.
and
Keep
the
it
second
simple.
one is use cannabis safely.
Yeah.
Nice little double entendre. So, and UCS Advisors was born out of need and demand. And what happened was that one of my former investors and also who was a mentor really taught me the art of capital raising and really taught me about capital raising systems before there was Instagram, before there was crowdfunding, before there was all these online platforms, actually doing it the old school way, like picking up the phone and actually talking to people, meeting with
Right.
people.
Okay.
And
I'm envious a little bit. It's like I feel like people forget that this like capital has always been around. Not
yeah,
always,
it's
but like
it's
hundreds of
always been
times.
around. And I mean, heck, I mean, one of my favorite stories is I had a consultant and we were trying to raise money for my company, and we were so new to cannabis. He goes, Raymond, do you got swag? And I'm like, swag? Of course I got swag. He's like, do you know what swag means? I go, no. He goes, it means shit, wild ass guess. And after we do that, we have to come up with MSU. I go, what's MSU? He goes, make shit up. And I'm like, you're kidding me. He goes, Dr. David, cannabis is so new, we don't have the data yet. Versus now, I tell people all the time, raising money back then was a lot of hopes, dreams, figuring things out. Now we
Yes.
have data. It's so much easier to find data and to literally put together a better deck to
Yeah.
back up your statements with facts and data compared to it was 15, 20 years ago.
Even 10,
So
yeah.
one of the biggest things at UCS Advisors, why I came up with this is that as an entrepreneur myself, who started some companies, sold a few companies, is where do you turn to when it comes to raising money, particularly your pre-Series A, like your friends and family, your seed round? Who do you
Hmm.
turn to? No offense to the accountants, it's not your job to find them capital or to teach them capital raising
Yeah,
skills.
for sure.
It's not your lawyer's job to do that.
Not the CPA's
And
job.
and a lot of business coaches work on the business and show you where their holes in your business, but it's not their job to actually teach you capital raising skills and to actually teach you the capital raising process. And more importantly, because you hear me say this probably a bunch today, is also implement a proper capital raising system.
Yeah,
And
the
that's where we
repeatable
are now.
process. Okay, no, that's it's very interesting, and I like kind of just the outside cannabis industry business acumen. I mean, I get it. It is a very unique industry being federally illegal, but there are just a ton of business best practices that we just can't get away from at the end of the day. It's whether we're selling services or cannabis products, revenue's revenue, expenses are expenses, assets equal liabilities and equities, cash flow's king. Like I find me an industry where like those three don't apply and I know I'll go figure something out. But that's where we start. Kind of when you started first breaking into the cannabis industry, being so early in the medical days, there was a lot of caregivers. So just that like quick question, what were some surprises when you started serving more caregivers that were starting really, really early days,
Oh,
providing products to
so
people?
I love the fact you bring up the caregiver question. I've been on a couple state associations for cannabis and helped
Nice.
fight for the caregivers. Um, what I thought was really interesting is for a lot of caregivers, so like, are you DEA? Are you FBI? Do you work, who do you work for? And I'm like, no, no, no. Like I'm in the industry, like I'm here, I want to learn. Um, what I thought was really fascinating was how many caregivers didn't want to grow exponentially.
Yeah,
They
that is
really wanted to keep
interesting.
it small and niche. While
Hmm.
now I'm seeing more growers in 2025 that did stuff on small scale. And they're like, oh, I want to increase it by like 10,000%. Like my
Yeah.
grow, my cultivation. That's where I think things are a little more interesting. But back then, to answer your question more directly, everything people did not want to give data. They did
Yeah.
not want to talk about their profits, their customers, how everything worked. There's a lot of gray area. And that's a big thing that really shocked me was how much of a gray area that there was. And plus, I also then own testing labs. I got a lot of pushback, Raymond. A lot of cannabis operators did not want testing because
Yeah.
they did not want the extra price. They didn't want to cut into the profit. I mean, I got a lot of pushback being in the testing lab
Okay.
sector early on.
No, and that makes sense. Michigan, I mean, they had medical cannabis in like 2009. And so I remember some cousins shooting up to the UP to be caregivers. And I remember also visiting them and thinking it was still a very much a gray area. Even though the state had legalized cannabis, hooray, everybody knows
Yeah.
that. The caregiver days were still very much a gray area, whether it's California, Michigan, obviously the Northeast has got, deep roots in the caregiver days, but that was medical cannabis. That was like the start
Yep.
of it. And yeah, there was a little bit of Trojan horsing where it's like, yes, we have to provide product, but we're also trying to start a business here. But no, they were a very important part of the cannabis history. And somebody like you who've been around 20 years, it's like in a little bit like those days people won't even really remember them. It's just like, oh no, this is how it's always
Like,
been.
because
So kind of
because they sell caregivers in Maine, they have caregivers, I think, still in Rhode
okay,
Island.
nice.
Yeah, so I mean, there's only a handful of states that still have caregivers, but it's really is customized medicine. I'll tell you right off the bat, and
Yeah.
one of
Yep.
the biggest things I've always advocated is as a medical professional, when I first got into cannabis, I was really worried about my reputation.
Yep.
And back then,
Absolutely.
I was getting a lot of pushback, especially running and owning physical therapy clinics. They're like, "Well, you're in weed now. Like, I don't know if I want to send my patients to you." And I had to be like, "Listen, I don't grow it, I don't sell it, I test it. I'm like the FDA of cannabis," which we
Hmm.
couldn't legally say that, but that was like the best analogy. Like, hey, know what you're putting in your body, plain and simple.
Nice, nice. We'll segue off of that topic, but I agree 100%. It's like, I mean, yes, of course, cannabis is fun, but it's also medicine at the end of the day. And it's like we can't really get away from that, even if you just use it for a workout recovery or just
Mhm.
winding down at the end of the day. It's like, no, it kind of belongs more in the wellness category than like the alcohol and big pharma or big tobacco category. Like, yes, we smoke it, but traditionally, I think of it as more of a wellness product, especially anybody who's spent time with real caregivers and seeing them interact with patients and the size of their grow. It's like they do it because they love it.
It was it's over the years, it's amazing how many patients well, I would ask them during the initial evaluation, and I for a little while I would get actually sometimes more patients come to my physical therapy clinics knowing I was in cannabis because then we would do our evaluation to be like, hey, listen, I didn't tell my doctor this, but I'm actually using cannabis for my pain, and they
Yeah.
didn't feel comfortable telling their orthopedic surgeon or their primary care physician they use cannabis, but they felt comfortable telling us once they found out that I had another business in that industry.
Nice. No, so yeah, how far we've come. And kind of yeah, thinking of that transition from starting to current time. Obviously, you started, more on the medical side, but you've transitioned more on, I would say, the capital management side, which definitely encompasses the capital raise. Like people think that capital raise is the end of the process, but I like to think if you're going to be a going concern business, you may have to do this a few times. And so kind of just thinking through the current capital environment for the cannabis industry, and you've seen it for the years. And so where would
Yep.
you say kind of where are we at in the current capital markets for the cannabis industry, and what events or decisions over the years, the last 5, 8, 10 years got us to where we are today? I know that's thrown a lot at you, so
It
I'll let
is.
you
So I'll break it down in parts. First and foremost,
please do.
let's address the monkey in the room for all the listeners. One of the biggest mistakes made in any industry is when you're raising money, once you receive the money, then the work really starts. And
Yeah.
the reason why I bring that up is that once you raise your first round, you got to be prepared to see if you need more money down the road. You need to start to plan your next raise or start to maybe try to get a loan or build your valuation of your company. A lot of people forget here at UCS Advisors, about 30 to 35% of our clients after they raise capital actually retain us to help them with their investor outreach, to help them
Mhm.
say, okay, when should I do an update? When should I do a newsletter? 'Cause that's another huge part as well, too. And you'd be
Yeah.
amazed, and in particular in cannabis than other sectors that we've seen, especially I've seen a lot, is people get money from the investor and then they'll screw something up within the first 12 months, and that's how they lose control of their company. Or that's why the company goes out of business because they violated maybe something in their contract with the investor, or they weren't fully transparent with the investor.
Mhm.
So then the next part of your question about the capital and the markets.
Yep.
You and I have talked about this offline. There's no more hype money in cannabis.
No,
All
no.
right. There's so much data. And the reason why there's no more hype money in particular is one, there's more data. We have more
Yeah.
publicly traded companies. You can go back, you can look at their financials, see what they're doing. We have funds who've raised a bunch of money for cannabis companies, and the companies didn't do very well. And what I think is really interesting is how many funds don't tell the public how many of their deals did not go through properly or fell apart,
Yeah.
and how many failures there's been. But also, too, back when I saw the biggest thing, especially I'm going to say pre-COVID, okay?
Okay.
In particular, pre-COVID, I'm going to probably say like there was so much what if, that
Hmm.
investors, professional investors, you know why they're called a professional? Because they have rules, they have guidelines, they're trained to just
Yeah.
invest. That's it. Kind of like you're a
Hmm.
trained CPA. That's what you're trained to do. Now, what if,
Yep. Yeah.
Raymond,
Certain
I said to
standards you follow.
you, hey, you know what? Here's a bunch of numbers. Everything you learned about being a CPA and the rules and regs, throw it out the window, and I want you to create a whole new guidelines on how to do my books. That's kind of nutty, right?
Yeah. Yeah. That would be tough
Well, that's what
sell.
investors were doing pre 2019. And especially like 2000, I'm going to say in particular 2012 to about 2017, 2018 was a sweet spot of
Hmm.
professional investors were taking their guidelines, throwing them out the window. Professional investors were saying it's such a new industry, we have enough data, we're willing to take the risk. We would traditionally say no to this deal, but because it's cannabis,
Yeah.
we're gonna make it the exception. Now
Mhm.
we saw in 2023, 2022, 2023 those investors in 2019 earlier, their deals fell apart, went bankrupt, lost money. And now, and what's interesting, like recently, MJ Unpacked in Atlantic City what they talked about this. They talked about this last year at Benzinga as well too. Is you're seeing investors in the cannabis industry say, "Listen, we made some mistakes. We didn't
Yeah.
follow our rules or guidelines. Now we are, and sorry, if you don't pass our tests, we're moving on to the next deal." And
Yeah.
where the cannabis market is going, the capital market, I get excited about because we are seeing more high net worth individuals, upper middle class, hedge funds now look at adding a little piece of cannabis to their portfolio.
Okay.
And what's interesting though is
Totally.
that these these banks, these lenders, like they don't go to the cannabis conferences. They go out and they hire third-party companies to represent them. And the check sizes aren't as large, but you're seeing more lenders in this space. I mean, great example is we work with a company, I won't say which one for privacy. They represent about 17 banks that will all give money to cannabis. But they don't want to be known for cannabis, so they actually hire this third-party company to represent them.
Makes sense.
To there we work with a high net worth individual who works with a bunch of different hedge funds. Well, these hedge funds, they want to put about 3 to 4% of their portfolio into cannabis.
Hmm.
And so there's money coming into the market, new money. It's just you gotta know where to find it and also find what we call your potential investor resource. So
Hmm.
early on, and this goes back to your capital markets, and people always ask, well, Dr. David, where are all these investors? I'm like, before 2019, they'd be at every conference walking around. Now,
Okay.
the last thing everyone wants is the word investor on their name badge because
Yeah.
everyone starts running after them like vultures and starts pecking at them and it's like, invest in me, invest in me, invest in me. So there's money out there, and there's a lot of people looking at cannabis deals now, which is exciting. Plus, also too, with the crypto market, you're seeing people do well on that, and they're saying, "Great, I now want to put some of that into cannabis now." Because cannabis, the one cool thing about it, it's also kind of like a restaurant or a bar. Hey, I'm part owner of a restaurant. Kind of cool. Hey, I'm part owner of a cannabis company. Still sounds kind of cool.
It definitely still sounds kind of cool. It is interesting. Man, there's so much to unpack there. And like I just come back to like the due diligence. Naturally, I have like an auditor background, and so it was just like that's why we did audits half the time. It's like, well, the
Mhm.
bank needed it, some other investors did, and then like the people to maintain their debt covenants, they just always had to get an audit. And so but it wasn't like specialized audits. It was very structured. This is how we do it. Because that way, an investor can look at a construction company and a healthcare company and decide which one is more healthy that he wants to invest in. Whereas I feel like cannabis for sure got away from that for a number of years, where it was just there wasn't that lot of data. And but to your point, now with the pubcos and even the private companies, like there's data out there. If you know where to look, if you're really in the industry, we predominantly, not predominantly, we only serve privately held cannabis companies at the moment. And so knowing the KPIs and the benchmarks and a little bit more what's feasible, like all that data is out there, and it's like it makes people a little bit more strict on the due diligence process. And then also just what are your uses of funds? Because we know how this works. You can't just kind of be vague on your uses
And
of
plus,
funds.
you can do competitive analysis now. And when people talk about like I'm originally from New Jersey. So people talk about the New Jersey
Okay,
market
that's an
right
interesting
now.
market.
And I go to them, I go, look at other states and look at their 5 to 7 year projections. They go, what do you mean? I go, if you notice there's actually a pattern with almost every state in the USA that when they legalize it, you see what happens over a 5 to 7 year period of time. And history keeps repeating itself. So one thing we tell our clients here at UCS Advisors is, oh, you want to do something in New Jersey? Well, go look at some other states that have been in the industry and legalize. Use that as a comparison. So when you're talking to investors, you can then give them that peace of mind.
Yeah. Well, I guess let's get into that then, kind of speaking more so the people who are actually raising the capital, the cannabis business owners, we
Mhm.
kind of think of it as the big three. You got to get a license, you got to secure real estate, you got to have capital. It in different times in history, the big three licensing at one point was a little vague, and that was like the hardest part.
Yep.
Capital was kind of a bit more available, but now it's a little bit, capital is clearly the biggest hurdle for a lot of people. Licensing, they kind of know the process now. 24 adult use markets have been opened, almost 40 medical markets. So, like, the lawyers and people have gone through the process of getting licenses, and even the real estate agents and securing commercial real estate. Yeah, getting green zoned back in the day was a little bit more of an issue, but now it's, the townships are accepting it a bit more, I would say, once the state
Yep.
legalizes, because they kind of see the tax revenue again, historical data. Your county and state's cannabis tax revenue is public knowledge. So,
Yep.
people have seen that. So, thinking through the actual business owners trying to raise capital, what would you say, are they most overlooking or getting wrong in their capital raising or capital management strategy?
Um,
And
Great
that's both on just
question.
like the
Yeah,
business
so so
plan,
so
speaking
I'm
more
gonna I'm
personally.
gonna say there's probably five major things that
Okay.
occurs with raising capital in terms of mistakes or some of the issues that they have. Okay. The very first one is this. Starting a business, no matter what industry you're in, costs money. And you're going to have
Yes.
out-of-pocket expenses.
Yeah, for sure.
So what blows my mind is when people are like, well, I don't have the money for an accountant. I don't have the money for a lawyer. I don't have the money to even for an advisor. Like, I don't have the money. I'm like, you don't have any money for any of this. So how much money are you going to take out of your own pocket? All right. And people forget that. And we have to remind people when you're raising money, in general, you got to be prepared to spend about 5 to 8% of it on fees. So if you're raising $1 million, be prepared to spend about $80,000 on lawyers, accountants, advisors, legal documentation, get everything done. Road shows, attending events. I mean, that's still 80 grand out of your pocket. And one thing that it's a nice little test. We actually work with a third party loan program for several years, and they're industry agnostic. And they do up to $500,000 of unsecured personal debt, unsecured. So we
Okay.
literally tell
Nice.
some of our clients, we're like, listen, this doesn't make a
Yeah,
difference
that's not bad at
what
all.
industry you're in. And I'm like, if you're in cannabis, I'm like, you just qualified for $230,000. Great, that's gonna get you off to the races. Well, no, I don't want the debts. I don't want to take that risk. I'm like, you don't want to take that risk, but you want an investor to give you like $5 million.
Yeah.
Like there's like you gotta have some skin in the game, and there's some cannabis investors, I won't say who, that I'm friends with. The very first question they ask Raymond is, how much money have you put into this company yourself? And if
Yeah.
it's less than six figures, they're like, you're not taking this serious enough. And they won't even look at you. The next part is when it comes to literally capital raising this industry, you need to put in and implement a proper capital raising system. There's too much to spray and pray. You can't do that. And like PMA, positive mental attitude, and you see us promote it. You see the pins that we use all the time. We give out to people
I
the
still
positive
got
mental
mine. It's on my hat.
attitude.
It's one of my favorite ones.
It is you're gonna get a lot of no's, but people give up too early. There's no money, there's
Hmm.
no this or that. So like when we actually work for our clients here at UCS Advisors, in the beginning, they're like, "Oh, there's no money. You got to find me money." We're like, well, did you give your executive summary to at least 100 people? No. Have you done at least 50 presentations? No. Have you created a master contact list? No. Like, how long have you been working on this for? 6 months, 7 months? How many hours per week? And when we hear the answers, that especially compared to some other industries, it's night and day. I mean, literally night and day. So people really need to
Yeah.
implement a proper cap raising system and really kind of get organized and be prepared for the long haul. The next thing is, and you're gonna people can probably get mad when I say this parlays off the cap raising system.
Hmm.
People are lazy. They don't want to put in the work.
Yeah, like the
They
100 reach outs. It's
literally
like,
like hey, they'll pay the accountant to sit here, get the books and get information. They'll pay the lawyer, hey, what do you need? But now when it comes to capital raising, you don't want to talk about it online. You don't want to attend events. You don't want to dedicate at least 5 hours a week towards this. You're not implementing the steps that you need to do. And the biggest thing is that also comes back down to literally creating a proper, which happens a lot, a proper investor data room.
Yeah.
And if you don't
In
do that, you're
advance.
never going to get it. So now comes the last two things that is really tough for, which is interesting what entrepreneurs don't do in cannabis a lot. One, they ask for money too soon. They don't build a
Yeah.
relationship. And what's interesting, especially in cannabis, a lot of us all know one another. I mean, I've had a deal, I've literally have had one deal in the last 2 years come across my desk about 9 times. And it's like you're doing something
Wait,
wrong
please
here,
re-say that
man.
again, because it is like because I've even seen deals come from different angles, and you're like, okay, this is out there. But yeah, like
Yeah,
9 different times you've seen the same deal, but from different sources, because people know each other, and especially
yeah.
it's like it's a niche industry, then with niche skill sets.
Mhm.
So it's
And this is
okay.
where people ask for money too soon. Like we have seen, we've had a few clients where we've gotten them investors, but outside the cannabis sector. And the reason why it had to be outside the cannabis sector was that they tarnished their name to cannabis investors by being too pushy, by not establishing a relationship. And that leads to my last point when it comes to capital raising. This is for any sector. You
Okay.
got to do a
Nice.
follow-up. Even if an
Okay.
investor says no to you, follow up with them and give them an update. Let them know what's going on with your company. Or if they say no to you, and Raymond, this next piece of advice is one of the infamous Dr. David's Green Nugget Advisor tips, which we post on LinkedIn every Tuesday and Thursday. Here comes a great Dr. David advisory tip for you. If an investor says no to you, ask them, what kind of deals do you like? Maybe I know someone that would be a good deal for you.
Yeah.
Givers gain. We've had a few clients in like this happened in 2022, actually two or three times.
Hmm.
Investors said no. And we
Yeah.
told
Good
them, hey,
stuff.
like, we'll ask them anything else. Our clients actually referred them another deal that they ended up investing in and they made money. Well, guess what happened? Hey, I made money off this deal. Thank you for the referral. Here you go. Do you still need to raise money for your company? I'll give you some money now.
That does sound like common sense. Damn.
UCS, use common sense.
Because it is, it's like, well, keep the conversation going. And if you're actually like an in the industry, like there's a plethora of deals. It's literally a growing industry. Every month there's new markets opening up
Yeah.
or new things going on. So no, I really like that of don't ask. Yeah, like you take them on a date first. You got to get to know them. Let's not try to close on the first night. Um, be a gentleman.
Yeah. Oh,
Okay,
exactly.
no, that makes sense. And then and just a high level, I got three rapid questions that I just
Yeah.
thought of. Just I want to get your brains. Just first thing that comes to mind, like speaking with investors, because I hear this back and forth where it's like they only care about the numbers, or they only care about the story, or they only care about kind of the location. And so, if you had to say, like, is there one? If you had to go down to an extreme of investors really only care about this, what is the story of the company, or what are the actual numbers behind it? Where is that kind of?
I'm
Where
going
do
to
you
give you a
land on
curveball answer. They care about themselves first. They want
that? I
to,
like that.
and where I'm going with this is the following. It's not about every investor wants something different. It's your job as the founder to ask the questions before you even pitch them. And you will save yourself a lot of heartache right off the bat. Like, hey, Raymond, what kind of deals do you like to invest in? I only like to do dispensaries and only dispensaries. Okay, great. Pre-revenue, revenue generating. How do you like to do it? That really is what's key overall.
Yeah,
And the second part is have a clear and concise ask.
yeah,
Like, hey, I'm raising this much money, and here's an example. I'm raising a total of $5 million. Our minimum check size is $100,000 in exchange for 2% equity. Anyone that wants to give me more than $1 million, we are offering a board seat and voting rights for shares. However, out of that $5 million, Raymond, we only need 2.1 million to get to revenue generating. That's clear, concise. The investor knows exactly what you need. But if you don't have that information, and that's why when you ask that question, what are investors really looking for? They're really looking for you to have your shit together. Have it
yeah,
have
yeah. Like any business can be profitable. It's just who's running it and how committed to their business plan and how well do they know it and have really thought through it. And to your point, just freaking ask them what they want. I kind of joke with people. It's like, well, you got to realize like sources of capital make money by deploying the capital. So like they want to make money, you want to make money, we want to make money. We can make more money together. We just got to work together. And so ask them what they want. They'll tell you.
Well, and this also goes back to when you and I were talking offline about this. We've had clients we've gone term sheets and deals for, and then they take too long to respond back. Or like, here's a great example. We we had a client, and it took them 10 weeks to give a 3-page response that was needed. We had not one, not two, not three, but 4 banks pull out of the deal because it took them too long. For them, there was an automatic yellow flag. If you
Yeah,
can't get
yeah.
a
It's like, what are they
three-page
doing back
report
there?
like in
Mhm.
that long, another great example is there was a hedge fund interested in investing in some cultivation. And they literally said, great, the only thing we need to know is some financials. When can we have that by? Great. Client said point blank, I'll have it to you within 7 days. Tell the hedge fund that. Now it's all of a sudden day 13. Hedge fund says, you told us 7 days. If you can't keep your word now, what are you gonna do with our money? Pulled out.
And it is, I mean, it kind of makes sense, you
Well,
know?
because they have money to spend too. And what people forget is people like, I want a bank, I want a venture fund, I want one person to bankroll as much as I can. Well, they'll do that, but they're not gonna wait around for you. There's so many deals out there.
That's a good point, right? It's not only is it the deals within your market and your licenses, a lot of this capital is national. And so they're like, I don't even need to be in that state. I could field deals in Massachusetts, in New
Yeah.
Jersey, in Maryland, in Delaware. So it's like you're not just competing against the other license holders in your market to get operational. You're kind of competing against other cannabis opportunities within the United States and other markets. And so yeah, being timely. And that's one of those roll your eyes things where it's like, well, being timely and courteous is like the easy stuff, you know? It's
And this is where it's also, I don't want to go through this process again because I'm gonna get denied. Or then I'm like, no, that's part of the game. And by the way, that goes back to what we said before. If you have a proper investor data room and you have a proper capital raising system, getting this information is gonna be really easy. And also
Mhm.
too is about putting your best foot forward. And that goes back to the lack of follow-up. Like, hey, if you say you're gonna do something, especially when it comes to money, get it done.
Yeah, yeah, because it's such an emotional thing. Like I kind of have learned over the years in talking with people of how to sell accounting services. It's like it's not like we're selling a car. Like it's pretty intimate when you're like helping somebody with their business. You know, it's not like we're just filing a tax return. Like we're seeing their cash flow every month and talking to them about it. And so it's very intimate, and especially on the raising capital side, like I've kind of noticed how emotional it is. Even though, like in my mind, I'm like, well, it's money and it's capital. It's like an underwriting process of cash flows and due diligence. It should be logic heavy,
Yeah.
not emotion heavy. But it's just inherent of startup companies in the startup industry. It's fairly emotional. So just like any success stories you have, Dr. David, of where people have been
Yeah.
able to like get over the
So,
emotional slash ego side of it and just do what
well,
they
and
need to
that's why we
do.
teach the PMA, the positive mental attitude here
Yeah,
at
yeah,
ucsgreatness.com. And
yeah.
and the other part is too, and here's another Dr. David's Green Nugget advisory tip.
Let's hear it.
You talk about the emotional part about closing the deal and getting money. A very simplistic way that you can do is create a timeline for you and the investor for the next steps. Hey, Raymond, you and I spoke today. Make sure we follow up within 14 days. And then from day 14 to day 30, you know what? I'll have my lawyer drop the first draft of a letter of a term agreement. Then from day 31 to day 45, we will review it, do some edits. Day 45 to day 75, you can do your due diligence, and let's try to have the contracts paperwork signed between day 75 and day 90. Once you come up with that timeline and you actually share who's doing what with the investor, you're going to know really fast that investor's serious or it's a joke. And you take
Yeah,
out
because
that
I like the other
emotion.
side. Yeah.
Um, but as far as success stories, oh yeah, we have numerous.
Just
Like
because I feel
one,
like there's so much doom and gloom in the cannabis industry, so I'm like, all right, just give me
all
some
right, so
stories
here
so
we go.
people know this
Ready?
happens.
We had one client, this cultivation, and we got him a whale. We got him a whale. Now this whale kept on wanting more and more things. Our client almost walked away maybe 9 times because it took 8 months to close the deal.
Okay.
But the guy
So
bankrolled the entire deal. And I'm like, hey man, like, picture like a fish. Like you have a marlin. You can reel it in a little bit, let out some line. Reel it in a little bit, let out some line. So that was a great success. It was one whale. and literally the client was going to say no. But after talking with them and going through it, they eventually say yes. Another great example is we worked with two females. They opened up a dispensary. And what was interesting is they had a real estate deal and then they had the dispensary deal.
Okay.
They couldn't figure out both. So what we did was we said, listen, let's change up your offer. We have two separate offers and let's offer a hybrid offer. We get a piece of both. And they were a great example of we changed that offering, made a hybrid that the investor looking just for the real estate deal, these women were accountable, responsive, got all information. The guy ended up bankrolling 75% of both deals. You know,
Okay, nice. Okay.
another great success story is there was a cannabis technology company and they refused to give company updates to their whole email list. They go, well, we only have a handful of investors. So that's the only people we tell them, like, no, take your entire email list, create some KPIs for yourself, write it in
Mhm.
your company newsletter, and then give an update every 45 days on your
Yeah.
progress, on your goals you set for yourself. Because if you're being transparent on your goals, then you're achieving them. People want to know that. They turn 28% of their no's into yeses for investors.
I like that, like building in public and hitting your KPIs and
Yeah, I
showing.
mean, so when people's like, "Oh, well, we're pre-revenue, we can't go after it." I'm like, "Yo, let them know what you're doing."
Yeah,
Um,
there's so much that happens before the first sale where it's like securing the license, securing the
yeah,
real estate, getting the product market fit or viable product market fit, whatever the
exactly.
SaaS slang is. It's like there's a lot of stuff that's good wins that show, all right,
Yeah,
these owners kind of
and
know what they're doing.
I'll tell you right now, we have a lot of wins. Is there's a lot of companies that need less than a million dollars.
Yeah, yeah, they're not building these,
Yeah,
spaceship facilities that we did.
and we work with a third-party loan program. As I was telling you, industry agnostic.
Okay.
Anyone can fill it out. We actually had a group of five. It was two owners, their wives, and then I think it was a mother-in-law, all applied for this loan program. All five of them qualified. They were able to get over $1 million in less than 14 business days.
Even the timing of that, it's like good dollar
Y-
amount, very extreme due
Yeah,
diligence process. That's
exactly.
amazing.
And like, so another great success story in California, a guy, it was through a mutual contact of ours. Guy calls me up and he's like, "Hey man, like I heard you're the guy that can get money really fast. Like, da da da." He's like, "I don't want to pay for your services. I don't want to do a deck. This is all I need." I'm like, "Well, try this loan program." He's like, no, I'm not doing that." I'm like, if you only need $350,000 and you know you're gonna be able to pay it off in less than 15 months, they're offering you a 3-year loan. Who cares if the interest rate's at 17%? If it's not going to take you
Mhm.
3 years to pay it off, it's not as much money as you think it is.
Right, you just got to get to harvest.
Yeah.
Yeah.
So this, that in general, I mean, last year we helped, like, I think it was about 21 or 22 companies through this third party loan program where people needed less than $1 million.
That's awesome. And that's very tangible money in cannabis because yeah, it's like people do just have some of these ridiculous capital raise figures. And don't get me wrong, like back in the day, maybe they weren't building huge facilities, but whether it's an asset light brand or retail or just a very focused, like they're not building a fully vertical company. Like I'm just going to start with product manufacturing. So I need a warehouse and some equipment and I got the license. So it's like anything a couple hundred K, it goes so far to getting you to post revenue, which it's like, okay, if you could get, and you have to be creative, like you said. It's like, well, don't think you're going to go to one investor and get the whole kitty. It's like you may need to show a little bit of progress here, which to your point, skin in the game. Like, yes, there is a risk as a business owner. That's why there's the reward.
Yeah,
Are
well,
the risk,
exactly.
are the
And then
reward.
let's go over some more success stories really quick.
Yeah, let's
We
do it.
forget you usually don't need all the money up front. You need it in what's called a tranche. And a tranche
Yes,
is just
phases.
like, let's say I'm giving you $1 million, Raymond. The first tranche would maybe be 100 grand. The second tranche
Mhm.
might be 300 grand. And people forget when you start to invest in your own company and make progress, your valuation will go up.
Yeah, yeah.
All right.
The
Then also you can
conversations are
change.
easier.
Then you can change your terms. So like the 20 plus companies last year that did this loan program was interesting. About half of them kept on raising capital. They redid their deck. They redid their executive summary. They literally say, "Hey, listen, we have an infusion of 300K. This is what we're doing with the money, so we're moving forward." That actually attracted more investors to them.
Oh yeah, if you have a
and give
license,
them
then you already
runway.
secured the real estate.
Yeah, and that's a big part too. And also, like you talk about the real estate securing it, have more than one piece of real estate as a plan.
Have
And
options.
I mean that's something where that's another Dr. David Green advisory tip. Find out why, then also too, because you're talking about data, do a competitive analysis. It is amazing how many people, especially for a dispensary, don't do a competitive analysis and don't do an analysis of why this town and why this location. You just can't say because the town said yes and that's the only place zoned for it. No, that's like 2015. It's
Yeah, yeah. They're like, I know a
2025.
person, so I'll get green zone there. That's why. It's like,
Yeah,
nah.
so like no, but like in 2025, it's more of okay, well, why is this location going to be good? What's the foot traffic like? And dispensaries, they're like shopping malls. They're like a regular store. Like, what's
Mhm.
your foot traffic like? Or is it a destination location?
Has
Um,
a near major roadway. What is the median income of that town versus like a
yeah,
town over and all that good stuff? Because it's like Minnesota is like a unique market that's opening up, and it's just the nature of Minnesota. It's way bigger than New Jersey, but like 90% of the population is on the East Coast in like the Twin Cities and Rochester. And then Rochester, a unique city because there's like more doctors per capita because of the Mayo Clinic. So in theory, tons of money. So like you could have a very nice high-end retail stores there, but the if you go west, it's like nothingness, and then you run into the Dakotas and Montana. So it's
yeah,
like your market analysis of where you're going to go after these, business locations, whether it's cultivation, manufacturing, retail. It's way more in depth than just oh,
yeah,
they said we can do it, so we're doing it here. It's like no, those days are got to be more strategic because your competition is candidly like they're being very strategic with where they set things and yeah, distribution centers to make it actually like logical to get your product to places or get it in there. No, very interesting. I want to be mindful of your time here, and so we'll bring this into land, but kind of thinking into the future. Obviously, you're involved in the cannabis markets. You know how we got here, you know where we are right now, but thinking forward, 1, 3 years out, even 5 years, how do you think cannabis will be different? And how do you think capital will be flowing into the markets in the future? I know it's a loaded
great.
question given
Yeah,
it's
no, no, all great questions. One, once we get interstate commerce, interstates. That's going to be a huge game changer, not only for capital, but also we're going to see more mergers and acquisitions.
Mhm.
Um, what I think, I don't want to sound like a Debbie Downer, the bubble's going to burst probably in the next 3 years.
All right.
Like there's only so much cannabis that can be done, so many stores. You're going to see stores going out of business. You're going to see some more brands. Interesting enough, on a quick side note, like we work with a certain brand specialist that actually starts in the pre-revenue stage. That so your whole message is based off the brand, and literally you're building everything to create a real brand. And now you're seeing these larger MSOs hire these hardcore brand specialists from Nike,
Yeah.
from Polk, like from Ralph Lauren. Like you're seeing big time brand specialists now get involved in this sector to create that. So with that being said, where I'm going with this is that you're going to see these brands start to acquire other companies. Okay.
Mhm.
The other thing is too for capital, whether it's rescheduling or 280E, if either one of those occur, period, we're going to see a huge influx of capital.
All right.
A huge.
Positive.
So like it's not one
That's-
or the other. From in my opinion, I'm a little biased here. The 280, great. That means your profit margin just went up dramatically overnight. Awesome. If it
Mhm.
gets rescheduled, well, if it gets rescheduled, your profit margin is going to go up, and you're going to have a whole lot more opportunity for the current campus operators. We're also starting to see in some states people want to invest using crypto,
Yeah.
and we're seeing that
That's right.
already. And we're seeing some people that did very well in crypto now want to invest using crypto. So we're seeing that aspect as well too. And overall, technically speaking, our industry for was it 24 years now or 26 years has gone up every single year. That's more than real estate. It's more than big pharma. Like
Yeah.
we really think about our industry. Even though we have some down years, we're still higher than the year before. Like
Every year.
we are still at the tip of the iceberg. I'd maybe say I have 100% being like we're capped out. I still think we're only at maybe 10 to 15%. We have a lot of growth to still
Yeah.
do. We're going to see a lot of compression. We're going to see mergers and acquisitions. We're also going to see, in my opinion, especially being here in New England, uh, we're going to see a big split. We're going to see the casual user that wants the Walmarts or like the Budweiser of the world. And then we're going to see the hardcore person who's like, okay, I want that craft beer, or hey, listen, I'm only going to shop local at like the local town hardware store or the local like
Yep.
clothing store. And I think we're see that pivot a lot. And I also think, which is really going to change, which we don't talk about enough, big pharma. Big pharma, I think within 5 years is going to come in, do some stuff. I mean, Israel's already been studying the plant for 20 something years.
Oh yeah, yeah, and I'm going to Europe after next week for their cannabis events, and they're much more medically focused, and then even the Canadian friends I have in the industry, you just realize how far America is behind in the medical game, and like rightfully so, it's federally illegal, so they're just not playing in it. But to your point, once it's a little bit more comfortable, there's levels to capital, and people don't realize $100 million company compared to a $10 billion company or $100 billion company, they're just magnitudes different. And so they could buy up like whole state markets, one company from some of these other like fringe industries. They probably won't, or they won't do it in one day. But like to your point, there's going to be an unlock, and other people in the industry that analyze it have talked about it, whether it's rescheduling that essentially lowers 280E, or safe banking, just pick one that essentially makes 280E a little less impactful, or the government making some type of catalyst move. And there's just such larger companies out there, because I always tell people that too. It's like in the cannabis industry, like a $50 million cannabis company is like very respected. It's like, okay, that is a company going somewhere, and $100 million cannabis companies are so rare, like they're like unicorns practically. Whereas like
Yep.
outside of cannabis, $50 million would be like one cost center of of some of these larger $20 billion entities, where they're like materially, if it's within 10 million, like that's not even an audit finding. And
And
so
it's funny you say that, Raymond, because like what we do here at ucsgreatness.com is talking with our founders, talking with business owners, like, what's your goal for this company? What is your exit strategy? Like when people talk about there's no money, investors want to know what what's your jam. And here's an example. We worked with a cannabis, very small cannabis dispensary in New England, and they didn't need a lot of money. And they're already revenue generating. But the thing about expanding, we actually got them a couple offers, and this amazing woman, she goes, you know what, David? I don't think I want to raise any money now. I'm like, well, why not? She's like, you know what? I want to leave this for my kids. I don't want to grow. I thought I wanted to have 5 or 6 dispensaries. You know what? I'm happy with the one, and I really don't want to expand. So for that, that was a great learning lesson per se.
yeah, yeah.
And
Glad they
and
made
that
that
and
decision.
and part of also too though is figuring out what your exit is. Like the one thing I hear when people are like, oh well, why should I think about an exit? I'm not a sellout. I'm like, no. You want
Yeah.
investors, they want to know how they're getting their money back. They want to know what the goal is. And
Mhm.
what I think is really interesting, our clients, when they have one or two or even three scenarios of what they want their exit to be, and they can articulate it, they get better rapport with the investors. The investors are like, wait,
Yeah.
okay, like, okay, I can see the path on how I'm gonna get my money back. I can see where you're going with this. Hey, I know this is a risk, but you have a game plan, you have a backup plan, and you have another backup plan. And that's where,
Yep.
a capital raising advisor comes in to help discuss these things and to also educate so you can have proper business etiquette, but also emotional intelligence. Because you were talking about people get upset, right?
Yeah.
Like positive mental intelligence, part of a lot of what we do is literally teaching emotional intelligence because investors will say stuff to you, Raymond. And I know certain investors in cannabis that will purposely say a certain question or two to rattle you. And
Yeah.
based
Yeah.
on your response, they'll either say, great, I want to learn more. Nope, you don't got it. This ain't worth my time. I'm probably gonna lose my money.
No, that makes sense. It's kind of like playing sports. It's like I always wrestled. It's like it's better to get your ass kicked with your own team, like before we go out on the mat in front of all the
Yeah.
fans and all the other team's opponents. And
Yeah.
it's like everyone wants to get their ass kicked in public. And so it's like, well, practice in private, because it's your component is practically gonna kick your ass. So it's like they're
Yeah.
gonna mess with you a little bit, and like how you prepare for that is how you respond to it.
Yeah,
So
so
that makes a
what
lot
we
of
do, we
sense.
call that the positive power of negative preparation. So just based off
Getting
your pitch
those.
deck, we actually have a program. We can figure out the top 8 to 10 questions an investor will ask you just based off of your deck. So then
Hmm.
we actually
Very
will
cool.
role play because people forget myself and also one of my employees. we're also both pitch contest judges. And we do pitch contests where we literally year round. And where we're giving that advice, but we
Nice.
always tell this is also where too my medical background really benefits our clients because I take a medical approach towards business. I treat each business like an
Okay.
individual and kind of like if you just had knee surgery and you're kind of feeling good, Raymond, I don't want you to get discharged yet. Run on the treadmill. I'd rather have you fail here in front of me before out there. So when people are like, oh, Raymond, find me money, I'll pay you a referral fee. No, give me your 2 minute pitch. Let me hear your 10 minute presentation right now without your PowerPoints. Let's go over some Q&A. Because if you can't do that and you're not prepared to do that, you're gonna keep striking out.
Right. And then you get in your head about the business. Like honestly, it could have been a great business plan, but you got two in your head for X, Y, Z, and I'm sure you see stuff like that all the time. Final question here, and then we'll bring this into land just because I got you here. But so say, no capital reform, no
Yep.
federal reform happens. How do you say cannabis businesses still win and grow in the capital scheme? Just thinking even into the next like 3, 6 to 12 months, because I doubt anything will change in there. So, and I know this takes time, but how do you say you still win even if nothing changes, just to be realistic? I know you gave a lot of
Um,
good points
so
already.
so 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 my wise guy answer is hire some really good attorneys.
I
I
can appreciate that. I can appreciate that.
yeah, I bring that up because every state has different rules and regulations. And
Yeah.
and we have clients in 33 states and in 7 countries.
Okay.
And the reason I bring it up is that I've seen so many interesting ways on how to set up structures to maximize profits through holding companies, through real estate companies, through ESOPs, to like all different scenarios, to hey, each time the cannabis company makes any money, they're giving it as a loan to another company. So like there's so many, I mean, listen, you're a CPA. There's so many different ways. So one, even if nothing changes, I think we're going to see some of the state
Strategy
rules and
changes.
regs change for like ownership and reinvestment. Like we're seeing tax credits, in Connecticut, New Jersey, Maine, and other states for cannabis. So you're seeing that stuff. Another thing where people are going to make it is this: have an action plan for the next 2 to 3 years. When I say have an action plan, meaning like, okay, what do we need to do? Are we gonna fully capitalize on our full potential here? Are we going to sit here and ride this out for a little bit and have a number to sell? That's the other thing is too. What's interesting, especially if you have a partner, when you're doing a business, you think about what's going on. There are going to be offers. People will sit here and to offer to buy you out. So think about that ahead of time. What's your number to walk away?
Yeah.
And that's something that's not really thought about. And that's where like we just had some like I mentioned someone turned down literally an 8 figure offer for a buyout. They thought they could get literally 2 or 3 times more than that, which were like, uh,
Yeah.
so in general, and this is for everyone listening, cannabis, it will beat you up. Like they say, it's like almost like dog years. Every year you're in cannabis, that's like being another professional for like 5 years.
Yeah.
But there's capital out there. Don't give up. There is a ton of resources out there and ways to get other types of capital as well too. All right. The other thing is, and this is another Dr. David Greenug advisory tip, is go to non-cannabis events. If you're the person who's going to raise money for
Mm.
cannabis and you go to a non-cannabis event and you're probably or maybe only 1 or 2 people in cannabis, you're going to get a lot more eyes on you and you're going to talk to more people and
Seems
more
like
people
common
want
sense.
to say, but you don't want to ever ask for money because a lot of times people ask for money too soon. Build the relationships, build the connections. And people know I work with a lot of investors, but people don't realize that I don't show them any deals at all till at least I talk to them or meet with them 3 or 4 times. I build a rapport. What are you doing? Like very rare will someone say, "Hey, I know you got some good clients. Show me what you got right away. I trust you. Just show it to me." Yeah, that happens, but a lot of times you're building that rapport.
No, that makes sense. That makes sense. And even, yeah, rapport builds trust. little bit more trust makes everything easier. Man, thank you so much for your time, Dr. David. Again, this was a pleasure. I think a lot of this is very actionable, tangible items, regardless where you are in your capital raise journey in the cannabis industry. So where can people find you to stay in touch or to get in contact
Sure.
with you?
So, UCS, right in the corner, ucsgreatness.com is our website. If you don't know if you're investor ready at all or not, go to ucsgreatness.com and click on the investor ready quiz. If you click
Okay.
on the investor ready quiz, it's a simple quiz and that you get instant results if you're ready at all or not. And yes, people do pass. And on top of that, too, if you go and you take the quiz, after completing the quiz, you actually will also get emailed a conference playbook on how to maximize your networking and maximize your time at conferences and events on the house on us. And the email just in the bottom corner, David at UCSadvisor, which is singular.com. Once again, David at UCSadvisor.com. And every Tuesday, Thursday, check out my LinkedIn page. Check out the UCS Advisors LinkedIn page. Every Tuesday and Thursday, we do a green nugget advisor tip about capital raising or networking. Free advice. Soak it up, learn it. I'm still constantly learning too. Raymond, I know you're learning because the minute we
Oh
stop
yeah.
learning is the minute we start dying.
No, for sure. And I think you said it best. Like the industry might not change that quickly, but our strategies and how we attack the industry and win, they are changing. And so we got to stay abreast on these best practices and learn from each other, help each other out wherever we can. So thank you so much for your time, Dr. David. We'll
Thank
talk to you
you.
later. Be well. Bye-bye.